Hi there. Are you one of those people who have been looking for how best to invest their capital but have been unable to find a suitable way of doing so? Guess what? Lead Capital has got you covered. With their impressive array of financial products and services, Lead Capital offers you the opportunity to invest your capital in a well-balanced portfolio that offers you financial security and growth. With the Lead Fixed Income Fund, your capital is invested for a minimum of 90 days. But guess what? You can be assured that your money is exposed to very low risks and your dividends are paid out biannually. They also have a lead balanced fund that exposes you to slightly more risk than the fixed income fund. However, this fund also offers you biannual dividends, greater returns, and a minimum holding of 90 days. Also, if you are looking to secure your funds from the depreciations associated with the Naira, Lead Capital has a dollar fund that helps you invest your capital in dollar instruments for a period of 180 days. However, they pay out your dividends biannually in dollars. And if you are a big-time Odogu looking to invest a serious amount of money, Lead Capital has also got you covered. With the Lead Gazelle portfolio, you could invest a minimum of $1 million for a minimum of 90 days and begin to enjoy some impressive returns on your investment. Also, with an investment of $50,000 to $200,000, Lead Capital PLC offers you the opportunity to hold private portfolios with them, where your capital is exposed to medium risk, your coupons are paid to you biannually, and you enjoy the world of Eurobonds, where you could earn interest on your capital investments in various foreign currencies. For more inquiries, reach out to Lead Capital PLC today with any of the contact information displayed on your screen, or reach out to us via our website at www.leadcapitalgroupng.com. Thank you. Lead Capital PLC, your guide to financial security. Hi there. Are you one of those people who have been looking for how best to invest their capital but have been unable to find a suitable way of doing so? Guess what? Lead Capital has got you covered. With their impressive array of financial products and services, Lead Capital offers you the opportunity to invest your capital in a well-balanced portfolio that offers you financial security and growth. With the Lead Fixed Income Fund, your capital is invested for a minimum of 90 days. But guess what? You can be assured that your money is exposed to very low risks and your dividends are paid out biannually. They also have a lead balanced fund that exposes you to slightly more risk than the fixed income fund. However, this fund also offers you biannual dividends, greater returns, and a minimum holding of 90 days. Also, if you are looking to secure your funds from the depreciations associated with the Naira, Lead Capital has a dollar fund that helps you invest your capital in dollar instruments for a period of 180 days. However, they pay out your dividends biannually in dollars. And if you are a big-time Odogu looking to invest a serious amount of money, Lead Capital has also got you covered. With the Lead Gazelle portfolio, you could invest a minimum of $1 million for a minimum of 90 days and begin to enjoy some impressive returns on your investment. Also, with an investment of $50,000 to $200,000, Lead Capital PLC offers you the opportunity to hold private portfolios with them, where your capital is exposed to medium risk, your coupons are paid to you biannually, and you enjoy the world of Eurobonds, where you could earn interest on your capital investments in various foreign currencies. For more inquiries, reach out to Lead Capital PLC today with any of the contact information displayed on your screen, or reach out to us via our website at www.leadcapitalgroupng.com. Thank you. Lead Capital PLC, your guide to financial security.
Good morning, esteemed listeners and investors. I want to welcome you to the third edition of our breakfast session. We want to thank you very much for your audience as we wish you a profitable investment week ahead. I am Akiyemi Omotayo, and I'll be taking you through the happenings in the fixed income space briefly. Looking at the money and treasury bills market, we see system liquidity closed on a negative region as we see funding rates advance from 32.33% and 32.75% from the previous week for the open repo rate and overnight respectively. For the treasury bills secondary market, activities traded on a mixed note as we experienced both significant buy and sell settlements from investors, subsequently closing the week on a bearish note amid sell-offs due to liquidity deficits. Ultimately, yields declined by 15 basis points to close at 25.21%. At the next Nigeria Treasury Bills auction, the Central Bank of Nigeria will offer 237 billion worth of NTB Looking at the result from the last auction, we observed that stop rates remained flat on both 91 days and 182 days, 18% and 18.5%. For the 364 days, rates declined from 22.90% to 22.62%. Looking at the bond market, for the bond markets, the federal government said secondary markets, the week closed on a bearish note. And across the yield curve, we also observed that the short end of the curve increased by an average of 25 basis points week on week, while the mid to long end of the curve was 20 basis points on a tenor basis. Thus, on the average, the yields across the benchmark bonds came up by 22 basis points to close the week at 19.90%. Maturities that were actively traded over the week in question were the 2026, 2028, 2029, 2030, 2034, and 2037 maturities. Taking a brief look at the foreign exchange market, the Naira witnessed a decline in value as the NAFEM rate closed at 1,547.48 kobo and on the 17th of January as compared with 1,543.03 kobo in the previous week. The outlook for the week, this week is expected that funding rates will trend at current levels on the back of expected outlook following the results of the coming Nigerian Treasury bills auction. We also expect that the federal government bond to trade in line with system liquidity as well as the Treasury bills market in view of this week's primary market auction. That being said, we cannot overemphasize the need to invest in the fixed income market space. This market can be accessed using a numerous wide array of products ranging from our fixed income fund, which focus primarily on capital preservation and growth. The risk profile on this product is very minimal, and the dividends are paid biannually. It has a minimum lockdown period of 90 days, and I think it is worthy to note that unit holders of this product have experienced 100% growth in their investment since inception. Looking at our lead balance fund, this fund takes a balanced approach to capital preservation and growth by diversifying across 50% investment in high-quality stocks, 50% in money market fixed income instruments. The risk profile on this fund is minimum. Dividends are also paid annually, and the minimum holding period is 90 days for this product. For our potential clients and investors that have a knack for fixed deposits, we encourage you to subscribe to our lead Gazelle portfolio with tenors ranging from 90 to 365 days and offering a competitive rate that exceeds your standard bank deposit rates. For investors that have intentions to hedge against depreciating Naira, we implore you to sign up to our Eurobond trading platform, providing our clients the opportunity to invest directly in US dollar debt instruments and earning your returns in form of coupons in the same US dollar. The risk profile on this platform is medium, and the coupons are paid annually. That's twice a year. It is worthy to note that the minimum investment threshold to subscribe to Eurobonds is $200,000. For investors who may not be able to meet up with the threshold of $200,000, we are excited to offer you our lead dollar fund. This product has a minimum subscription fee of $1,000 and minimum holding period of 180 days. The dividends on these products are paid biannually, and it comes with a very low risk profile. That being said, let me hand you over to our in-house expert trader, Mr. Gbewato Amosu Sunday, to give you a brief insight on the happenings in the equity space. Gbewato, over to you.
Thank you, Mr. Atai. Thank you, our IS team. Thank you for joining us this morning. Briefly, we look at what happened last week and what is our strategy this week. What is our expectation? What was the profit you joining us this morning? What are the insights from our meeting this morning? So briefly, I just want us to have overview of the market. What happened January last year, where we are last year, what is happening currently, and what is our outlook for the remaining part of the year. Next slide. Let's move. Next slide. So last year, at this time last year, the market has already gained 26.67 last year. And what are the key drivers? Because we compare what is happening in the capital market with the money market, especially the savings bond, the treasury bill, then, and what currently are they doing now? The majority of people are taking the advantage of the high interest rates in the money market, and that has severely impacted on the equity market. I'm telling us that this is the worst January ever in the equity space. For now, last year we have already. So what are the drivers last? So if you look at what happened, the treasury bill last year was just 10.95. Last year, the treasury bill was 2.4. That was 91 days. So compared to what we have now currently, now the treasury bill 91 days is currently 18.93. So you can see the large gap where we were last year. It was just this morning now, the 91-day treasury bill is taking the advantage. And for Nigeria economic, we are having a rebase. What does that mean? That since 2014, that was the last time we did the exercise. So, and it is mandatory by the UN globally that every 5 years there is a need for us to rebase. And what would that mean to the market? So if we are to rebase this year, that means that there's a high possibility of the inflation to go down. And people are taking advantage of that before the exercise commenced. So that is why we saw a lot of capital move from the equity market to the money market. And that's how really impacted on the turnover last week. We saw 2.5 billion share worth 58.93 billion was traded last week. Contrary to what we have in the previous week, 4.7 billion shares value at 54.04. So, and the financial sector, as usual, led the group with 1.37 billion value at 22.7 billion, contributing 60.86 in terms of value, and in terms of volume, 37.86. So the equity volume and the value respectively. So the consumer sector also follow through. So the all share index last week was it reduced by 2.94, and with the basic points was 102.3.95. So the market capitalization last week was 52.95 billion. So this gives us the overview of what is happening in the market, and this is an opportunity for people. So there's no need for us to panic. And the highest we are having even in the money market for the 365 is 23. So if one can wait, as results are coming out now, we saw fantastic results. John Oates posted their result. It was so amazing what they posted. And also Nigeria Industrial Deficit also posted their results. It was also incredible. So we are expecting a lot of corporate actions to hit the market this week. And what with that was, it will give us that a fantastic result will be posted, and we see that it's time for people that have waited enough in the equity space to in. And we advise our clients, there's no need for us to panic. We know what will happen at the end of the day once the result comes to the market. This is an opportunity for people to buy. As we see that there is a bearish in the market, it's an opportunity to increase our holdings, because the result that will be coming out will be mind-blowing. So this is a very wonderful moment for people to take advantage of the market, increase your holdings, and you are going to benefit doing that. Let us move to the next slide. So for the banking sectors, we have already projected our expectation for the corporate actions. So we are expecting, at least based from Access Bank, we are expecting last year what they paid, that was the latest, it was 2 naira 10 kobo, and their profit after tax for the third quarter was 367 billion. So we are expecting fantastic results from Access Bank. We saw them moving to other jurisdictions, not just only in Nigeria, they also got a large bank in South Africa. So all these banks are expanding. We also saw Zenith Bank moving from Nigeria to open a branch in France. What does this mean? So they also want to aim forex. And we have seen a lot of that move. We saw Unilever also moving from Nigeria to Benin Republic. We also saw GM Homes also moving. So we have seen a lot of diversification from the economy so that they can be able to increase their top earnings. So that is the move now. And that is an opportunity for us to see such bank companies that are taking such move. Presco also, they moved from Nigeria to Ghana. And we have seen, ever since they have taken that decision, their share value has greatly increased. And the expectation is that as that will be impacting on their top line, that would be a a good return on investment. So we are looking at those sectors and actions that have been taken, how it will affect their top line. So this is an opportunity for people. So there's no need for us to be worried. A lot of people have been calling that they are worried the market seems to be dull. It's an opportunity to increase your holding. No need for panic. Now people should just say, no, you don't need to sell. It's an opportunity for you to increase your holding while we wait for the corporate action to be released to the market. So GTB also, we are expecting is a buy for us. FCMB, according to our EPS, their earning per shares is 3.46, and their year to date is 47.3. So all these are what are part of our recommendation. And currently now, Stanbic IBTC, they are doing their right offer. And we also recommend that people should buy. Their last price was 59 naira 50 kobo. So the right price is 50 naira 50 kobo. So they are doing wonderfully well. Even among the banking sector, their earning per share is the second among their peers. So currently their earning per share is 14 naira 64 kobo. So we are encouraging people, and their yield is 28.89, and their dividend is 6.3. So there is a huge opportunity for people that already have that privilege to take up their rights, position themselves for good earnings in the future. Let's move. So these are top recommendation, our projection for the dividend. We are in the corporate action now. Last year, what Access Bank, they declared 1 naira 20 kobo, and are projecting this year they will pay minimum 2 naira, and that will be equivalent to 8.28 dividend yield. And if you analyze that, you can't compare what you are going to the money market to go and get 25. So you can't get it anywhere. So it's a very good one for anybody that has already head on to Access Bank, not to quit now. They annualize it if they are to wait for the dividend. So they annualize it between 5.9. We can never get it anywhere. So it's part of our top recommendation. And we also compare GTB, they annualize it for people that have been holding until 23.60. So you can't get that. That is why we are telling now. There's no need for you to panic, to sell because other people are selling. No, you wait to increase more of your holdings, and you will what doing that. So UCAP also, we are recommending 1.8. That's our projection. And if you calculate your dividend yield, that will be 8.0, and they analyze it over 24.37. So we recommend you being able to take action. Stanbic IBTC, Zenith Bank, Aeco, Cotondia, NEM, Dangote Cement, WAPO, Okumo, Presco, Aradel, and to the top of our recommendation this week. Let's take advantage of the market. I'm telling us where there is uncertainty, where there is that is opportunity for people to take hold of the market and increase their holdings. So this is an opportunity for people that have not in position to take more, to improve on what they already have. Let's move to the next slide. So all these from 1 to 26, we have already sent our recommendations. Our recommendations are out sent to our clients. And if you have not gotten the recommendation for this week, you can contact our customer service. We respond to you promptly. So from 1 to 26, Access Bank, First Bank, FCMB, ETCO, UCAP, UBA, all are top recommendation for this week. And for the holding, we have Azamazad, Afriprudential, Africa, Corn Oil, Cabri, Nestle, they are on hold. And for our sell is Eternal Oil, Ereku, Transcorp Hotel, and Transcorp Power. So in our outlook, last week, what happened was if the top most capitalized stocks have any bearish, that will have impact on the market. That was what happened. We saw Dangote Cement yesterday trading, moving to the bearish zone yesterday, and it lost 6.8 trillion market capitalization, almost 11% of total market capitalization lost. That is 16.46 during the week, tagging the all share index with it. So that is what led to that. We saw Dangote Cement for a long period of time has been on full offer. And last week, the price was moved lower. So that was what led to massive loss last week in the market that we experienced. And this week, we have seen fantastic results posted by bank. Donote, if Donote could move from negative of 800 billion to the tune of 100 billion in a single year, that shows what we should be expecting from other companies like GTB, like Zenith Bank, if their results should hit the market. So this is an opportunity for people to increase their holdings as the market is in bearish mood now, for people to buy more and expect profit this week. So our view for the week is that we expect mixed trading. Some people would like to take advantage of the market to move up their capital to money market so that they can position themselves against the rebasing. But for people that still want to hold, I'm very sure of that and certain that what the future holds for us is a great and fantastic result. So there is no need for panic or unnecessary sell if there is no need. All we just expect is for people to take advantage, increase their holding so that they can get more. So we really appreciate every of our listeners for joining us. So this is our time for questions. If you have any questions or any form of inquiry to our product, this is time for questions. So the question, what is the ratio of Stanbic rights issue? Come in, let me have the information here. That question, I will answer that.
You can indicate by raising your hand icon.
So for the trading license holder, notified trading Stanbic IBTC issue of 2.9 million ordinary shares of 50 kobo at 50 naira, 50 kobo on the basis of 5 new ordinary shares for every 22. So 5 for 22. So on the basis of 5 for 22. So if you have 25 old units, you get 5 new rights issues. So for every 22 units, old units, you qualify for 5 additional rights. So 22 for 5.
So Mr. Said Adebayo is asking, please, what is your opinion on Dangote Sugar?
For now, there is no any corporate action. We haven't seen their performance, so we can't recommend until when we see their last quarter, that's Q4 result, before we can now see whether they have moved from the negative zones to the positive zone. So till there, we cannot give any. What we are just seeing is just speculation. We know that every January, we know that trend that Dangote companies are always rising every January. So it's just based on speculation. So until when we see their last quarter results, before we can now give a valid opinion on that, then we are still waiting for their results.
Okay, another anonymous listener is asking, what will be the impact of rebasing in equity market?
So,
I hear you mentioning that in your presentation.
So basically, what we expect is that, imagine if the inflation from 34.80 at the end of the day reduced to, let's say, 30 or 24. That means that the MPR, there will be no need for the MPC committee to increase. That means that the MPR will reduce and the borrowing cost will somehow reduce. If you can see the result that has been posted so far, the major challenge is the cost, the borrowing cost. And that has really impacted on what's on the top line this year. So if that rebase exercise is being done, what we tend to happen is that the borrowing cost will be reduced and people can have access to a lot of capital to drive the economy. So that would be a very huge result or both for the economy, because the cost of capital will be drastically reduced and people can have access. A lot of people coming to the market, to the money market, to raise commercial paper at the rate of 30%. That That is very high. So with that, what we see that the MPR is going to reduce and the cost of borrowing is going to come down drastically, and that is going to impact on the top line of all the companies. There will be more production, a lot of people will be employed, and that will have very strong result on the market. So Q1, we are expecting a lot of positive results because cost of borrowing will be reduced and the impact of the revenue will be low. So that means that a lot of bonuses will be declared, high bonuses will be declared next year. At this year, first quarter result will be great.
Okay. Another listener is asking, is John Holt overvalued presently?
John Holt, based on our previous result, what we have now is that the result is out, and based on what they have done currently now, it's not overvalued. Currently, with what they have posted, their results, their earning per share now has moved from negative 800 kobo to 600 kobo. That means that their result was fantastic, and we saw a lot of diversification in their business. So currently, it's not overpriced. It's an opportunity for people to take position in the company. For people that are interested in that, it's not part of our recommendations. For people that want to invest, you can call us and we do a thorough analysis when to come in and when to buy. So if you want to go into John Holt, call us. We are here to advise you and give a very valid. So what do you think about Veritas? Veritas, maybe you can, Mr. Said, I don't, maybe Veritas registrar. Okay, Veritas. Okay, what do you think about Veritas? What we currently now, we have seen a lot of recapitalization going in that sectors, and that has prompt an increase in their value. So what we are looking out for is their Q4 results. That will tell us, that will give us data for us to value them. But now I'm telling us all the insurance companies are currently undervalued. So it's an opportunity for people to take action. We saw what happened in the banking sectors when they came to the market to raise their capital, and based on what they are currently doing in terms of price, some of them have gained 30%, 20% in value, and their result also has strongly moved higher. So we also expect that to also happen in the insurance sectors. As they increase their capital base, they have more funds to invest, they have more funds for their business to go into other business to increase their top earnings. So it's good to go for people that want to take position in the insurance sectors. But one of the major things that we need to know is that their dividend, have they been consistent with their dividend payments? How consistent are they in the times of, I don't think that Veritas have paid dividends for a long period of time. So for you to go to that sector, you have to be very careful. Look at their antecedents. How have they been paying? Have they been consistent with their dividend payments? How is their top earnings so far? So that you don't tie your money to company that doesn't pay dividend on a regular basis. That the only advantage is all the capital appreciation that may not be certain. So we have to be very careful, not just for speculation sake, but with company with strong fundamentals should be our guide in investing in any of these companies. So we really appreciate our high esteemed listener for joining us this morning. There are very huge opportunity in the market. So what is happening in the oil and gas sectors? Oando also won a major contract, oil block in Angola, that will also impact on their top earnings this year. And we also saw many companies moving from Nigeria to other jurisdictions so that they can earn money in foreign currency, and that also will impact on their earnings this year. So let us look at those companies taking drastic steps to impact on their top earnings this year. Presco has moved to Ghana. We saw Julius Berger also moving to Benin Republic, diversifying not just only in construction, they're also into agricultural production, and they are exporting huge cashew to foreign land so that they can earn in foreign currency. So all those actions will impact on their revenue this year. So, and we are recommending people to take actions in those companies that are taking steps to improve their top earnings this year. So we really appreciate you for joining us this week. We wish you a very prosperous investing week ahead. So thank you for joining us. Do have a wonderful week ahead.